Greetings, my beloved clients and friends. So today's January 27th, 2022, and I want to do a reaction video to Fed Chair Powell's testimony yesterday after their Fed meeting they just had the last Tuesday and Wednesday. And so I want to put into context of the mandate of the Fed. So there's a 3-point mandate of the Fed, and these are the three things that they are tasked to accomplish or to contribute to. Number one, full employment, stable prices, and economic growth. Those are the three things that the Fed is tasked to do. Okay, and Chair Powell touched on all three of those things, and he said because of that, this is going to be our policy going forward, at least in the near term. So I'll go in order. So the first one is full employment, and he said that we are at max employment right now. There's a labor shortage in the United States. Okay, and so in response to that, it would be okay to raise rates because we're not worried about unemployment getting too high. If anything, unemployment is a little bit too low, right? And we're having these wage pressures and we're having this labor shortage. So looking at the current labor market in the U.S., it would be okay to raise rates. Okay. Second point, full employment, stable prices. Stable prices means low inflation, and the Fed targets an inflation rate of about 2%. Okay, that would be them achieving their objective of stable prices. And for the last 20, 30 years or so, unemployment has been around 2, and even at times under 2. And about a year ago, Chair Powell said, it's too low. I wouldn't mind seeing some inflation and carrying it a little bit above 2 so that, our average is 2, right? Well, recently in the last 6 months or so, inflation has really taken off. It got above 2 is what he wanted, but it kept zooming past 2. It got to, most recently it was about 6, in the 6 to 7% rate, which is the highest it's been in over 40 years, right? So because of prices have been shooting up so much recently, his reaction would be to raise interest rates, right? So the current state of the labor market supports raising interest rates. The current state of prices, the fact that inflation is running at about 6%, support the raising of interest rates. And then the third point is economic growth, right? And he said, we're above trend on economic growth. So that would support raising interest rates too. Because the risk if you raise interest rates is that you will hurt economic growth. He said, but economic growth is higher than we expect it to be or plan it to be anyway. And, the risk to raising interest rates is that it will create unemployment. And he says, well, we're in a labor shortage anyway, and so there's given the 3 Fed mandates, there's no reason not to raise interest rates. It's not only because of inflation, but the other 2 support raising rates as well. So he said, expect us to raise rates. We're winding down this accommodative stance, and we're going to start raising rates. And he said, asset prices are pretty high. They're near all-time highs, and that's not one of our mandates anyway. So if it affects asset prices in the short term, that's not our priority. So he came out very clear and strong and unequivocal that we're going to go into a interest rate hiking cycle. And so how would that affect us as investors? Well, the stock market likes to eat candy 3 meals a day. They do. They don't like to hear anything like that. And they wish that he would just be continuously printing money, right, and elevating asset prices. But the fact is that he's doing the right thing, and the market might throw a tantrum, but in the end they know it's the right thing to do, and it's the thing that will position the economy, maybe not for a great next quarter, but over the next several years. It's the right thing to do to position it to continue on this incredible expansion we've had for the last 12 years. And similar to in '81 when Volcker came in and he raised rates. I mean, he raised rates dramatically, and he pushed the economy into a recession, and he didn't care because he was done with inflation, and he was going to put the knife in inflation, and he did. And so we had to endure a rough year or so, but it ushered in this incredible period of growth and prosperity throughout the 80s, right? Greenspan did the same thing in '95. He raised rates 6 times, and it was a very uncomfortable period. I was early in my career, and I remember how difficult the meetings were for that year. But it ushered in the last half of the '90s, which was an incredibly prosperous time in the markets, right? It was a 96, 97, 98, 99 was a tremendous time to be in the markets, right? So I think we're going to have to take our medicine, and it probably will be a challenging year this year, but I believe it could usher in the 20s, the decade of the 20s could be very good. And so it's like if you had a wedding in 3 weeks and you're like, shoot, I'm going to have to take some austere measures and not eat much for the next 3 weeks. But on wedding day, I'm going to look good. And those pictures are going to be in people's albums forever. So that short-term pain is going to be worth the long-term rewards. So I think we just navigate through this. We look for companies and asset classes that are resilient in rising interest rate environments, and we position the portfolio to when we get through this to be well positioned for the upcoming rebound from this. And I personally think he's doing the right thing and paving the way for continued prosperity. Now, he's not the only thing that controls the markets. There's other geopolitical types of things that could happen in the next year and 5 years, and so even if he does perfect things, so it's not the only determinant of a successful market, but in his lane, I think he's doing the right thing, and I think as investors, we just ride through this, and we'll be positioned for another period of good times ahead. Okay, so hope that helps with the comments on current events, because I know we're in a time when clients want to hear what's going on. So I'm trying to be communicative. So I hope you guys have a great day.